Hello and welcome to another episode of BFRR, a Bitcoin, Fiat and Rock and Roll podcast that explores the impact of blockchain technology on the financial sector. I am Stefan Grassmann. Today I have the pleasure to be your host together with my dear friend Manuel Klein. Welcome, Manuel.
Hi, Stefan. Hi, everyone.
Hi, Manu. In this podcast, we often talk about the adoption of crypto assets like Bitcoin and Ethereum. Another big category is the realm of digital money like CBDC and stablecoins. But there is a third very important category, the tokenization of securities and the rise of regulated financial market infrastructure that is necessary to make tokenized securities work at scale. And this last category is our focus today, with our guests from 21X, the first regulated marketplace for tokenized securities in Europe. And we are very lucky today. We don't have just one guest, but two. Welcome, Victoria Jan and Max Heinzler.
Hi, together. Nice.
Hi, everyone. Thanks for having us.
Cool to have you. To get our listeners up to speed, please give us a short intro, who you are and what's your current role at 21X.
Yeah. So I'm the founder and CEO of 21X. My background is really in capital markets finance. I've spent years in investment banking and traditional financial services, ranging from structured products, venture capital, mezzanine finance, corporate finance to fintech, which kind of caught my attention 10 years ago at first when we were innovating in the crowd investing space, and founded 21st Finance in March 2017 and pivoted the business twice to get to where we are today. Over to you, Victoria.
Thanks, Max. I'm Victoria. I'm head of regulatory affairs with 21X since March of this year. And yes, in my previous role, I was lawyer and most recently partner. And yeah, my focus is very much in the digital asset and crypto asset sector. And yes, in that role as a lawyer, I had the pleasure to support 21X in securing the license and yes, to prepare for the go live. So very exciting journey so far, and it's more to come.
And then you moved over.
Yes. Everything into 21X was kind of the decision I made for my life or job.
Okay, great. And to give the podcast a little bit of structure, because we could cover many areas, because the stuff that you are doing is very interesting. We divided it into 4 main chapters, and let's be aware of our time that we can get through all of them, because all of them are very interesting. And we'd like to start with the journey and the vision. Manu, please go on with the first block.
Yeah, Max, maybe starting with you as the CEO, you've already mentioned that you basically have a traditional finance background in capital markets and structured products, structured finance. But how come you then moved into blockchain and tried, after several pivots, as you said, to provide this new market infrastructure that now 21X has become? We're going to come back, obviously, on what 21X is, but what's been your path? And why did you then decide to double down on bringing blockchain into the regulated financial sector?
Blockchain really caught my attention for the first time in 2014. I would say quite a bit before crypto was a dinner table topic, and still at a time where it truly where it could be classified as being still the wild, wild west, with regulation not being in place. And at that time already, I think what really caught my attention was more on the tech side rather than the currency side, where blockchain, you could kind of say, was the missing ledger for capital markets, and efficiency gains, like both in the primary and secondary market, were just pretty obvious to me. So I would say, like, the last decade, I was focusing really on one question specifically, and that was, how do we take the fundamental revolutionary efficiency of DLT and house it within a bulletproof institutional grade regulatory framework? And I think that, as I mentioned earlier, we pivoted our business twice. So we used to be an investment broker for security tokens, being surely amongst the first companies to offer security tokens to retail clients in selected EU member states, to then move to becoming a SaaS provider to enable financial institutions, asset managers, and also fintechs to issue and distribute security tokens in a regulatory compliant form. And at that time, we really learned a lot about, what the next challenges would be, but also what the demands of our clients were specifically. And so I believe it was 2023, in the beginning stages of 2023, when we came across, the regulatory developments that were, I would say accelerating within the EU, where we already had custody, frameworks. We had registrar frameworks for the EU DLT Pilot Regime to be announced by the EU Commission mid-2022, with it becoming clear that it would become effective as of March 2023. That was the time when we made a strategic decision to refocus and strategically shift to becoming the first EU DLT licensed market infrastructure provider. That's, I think, in a nutshell, really how we entered the crypto and blockchain space and also how it evolved.
That's a great bridge to 21X, what it actually is. So you said it's a regulated financial market infrastructure for likely those tokenized securities that you've been focusing on over the last years already. Explain us in one sentence, or maybe also in two or three, what 21X is and what you actually do, and why is it so revolutionary what's currently happening in Europe with those licenses where you actually got one of those licenses that are used to provide regulated financial services on a blockchain.
Yeah, sure, Manuel. I always struggle, to be honest with you, to do it in one sentence, but let me try again, right? So 21X operates Europe's first regulated DLT trading and settlement system. So in short, they call that a DLT TSS. Really, what it is it's a blockchain-enabled exchange that completely eradicates the need for a central securities depository and clears trades in T+2 seconds. So we're running today on Polygon, but we are going to also integrate further protocols. We have the permission to operate on multiple chains. And what that really allows us to do is to enable atomic matching and settlement directly on blockchain. So what we're doing is we're solving the problem that in today's capital markets exists in our view with T+2 or T+1 days, including settlement risk, where we eliminate friction and also post-trade costs by turning complex multi-day processes into, say, a single automated real-time code execution.
And that all focused, as we already discussed, on securities, right? So it's really not a crypto play, so to say. Or is there also a twist or angle where you say crypto tokens, crypto coins that are not securities can also be traded on this marketplace?
So that's right. So for the time being, we have on the cash side, we have stable coins. These are clearly regulated in Europe under MiCA. And then you have on the asset side, for the time being, asset-backed tokens. So in Europe, they're classified as DLT financial instruments. And this is something that I would say is possible in the future for this to be extended also to other assets. Right, for the time being, we're focused on exactly those two. It's actually the case that DLT financial instruments are then also restricted under the EU DLT Pilot Regime. We can only do a certain set of, or we can only admit to trading a certain set of DLT financial instruments. You could categorize them as equity debt instruments and also fund structures. That's our focus for the time being.
Maybe to wrap a journey in the vision chapter in the beginning up, Max. I mean, it's obviously a long journey when it comes to providing blockchain-based services for the traditional market that has now taken up over the last years. But you said you started quite early. So what made you stick to the idea through all those market cycles that we went through? It must have been a wild ride. There must have been also at least one moment where the idea almost died or where you had to pivot. So yeah, tell us about that journey. I think it's going to be an interesting one because it's lots of ups and downs, right?
Totally, Manuel. And let's put it this way: like you need, obviously, like I mentioned before, I guess I started this journey in 2016, really, when I made that decision that I, would start my own business. And it's been fair to say that it's taken longer than what I originally anticipated. I think it's fair to say that you need a relentless conviction, but, first principles conviction, if you so want. I never really focused on Bitcoin too much, even though I'm a big believer in Bitcoin and also I think it's fair to say, for me, some of the efficiency gains that became clear that could be realized, that's what really, drove a lot of my motivation. I guess when you come to understand that DLT can reduce also systemic risk and that it can lead to cost-cutting degrees of 50% and more. Also, if you think about 24/7 operations, you just can't simply unsee it. When we saw the regulator moving also the framework for innovation in a direction that we thought was game-changing, that's when we were convinced that we had to act. So we just always set out our aim to be the first to deliver a system that meets those high standards that were also proposed, by the regulators. And we actually always embraced it as something that in the long run would give us also an edge. In particular, also for us, institutional grade is an important topic, right? Many of our customers, our partners are institutions, and that steadfast focus made the market noise really irrelevant for us. And I guess there was a lot of noise, and we're kind of being proven currently, I think, right, with being quite optimistic that this is heading in the right direction.
Yeah, super interesting. Congrats to sticking to the idea and then building it out to get the TSS license under the EU DLT Pilot Regime. I think that's a perfect bridge now to the next piece where we also want to focus exactly on that. Maybe for you, Victoria.
Yeah, maybe guiding you towards that second section we want to talk about, Victoria. There are three different angles to the DLT pilot regime of the EU. There are the MTF, the SS, and the TSS license. And I think the TSS license is the most interesting one. And as far as I know, I think you are the only one who got that to full extent. But please correct me. But explain to the listeners maybe the differences and what you are actually allowed to do with that license.
Of course, thank you. To correct you here, Axiology is the second that had the pleasure to gain this license. So we are two currently. And as far as I remember, LISE, a French entity, is also now entering the plate of DLT TSS. So we have fellows here. But yes, we're the first one that had the pleasure to walk this road. And from a regulatory perspective, the beauty is very much into the DLT TSS system. Why is that? Because we are able to combine an exchange with a settlement system. And that's the special one, because you do not have this in this kind of way in the traditional market yet. We have kind of the exchanges, and separately from the exchanges, we have the CSDs. So we have two kind of pillars responsible for matching and settling transactions. And with the DLT TSS, we can combine these two systems, you can say, in one entity. And on top of that, we are building this on DLT. And the beauty of this is that, yes, we can enable the atomic settlement system, meaning that we build this on DLT, of course. So we have a central limit order book based on DLT. So this, you can say, order book is responsible for matching. And in this same engine, you have the settlement system. So in the moment of matching, we directly have the settlement of the matched order. And this will be in about 2 seconds currently. And this is, yes, you can say, the distinction mark in comparison to the traditional market. And yeah, that's in a nutshell the beauty of the DLT TSS. And yes, the real enabler of efficiency gains and cost savings. And yes, also bringing a lot of added security for the participants.
Great explanation. Because with that, I think you're in between TradFi and traditional exchanges that move into blockchain, but usually they only go for the settlement. So you might have seen the NASDAQ announcement that they want to tokenize the NASDAQ stocks, but they say, okay, the trading facility is so fast. We put so much energy into that. We stick with that. We just try to gain the efficiency gains out of the blockchain thing in the settlement part of things. And on the other hand, I see we have the new crypto exchanges who are fully on-chain, but maybe not regulated, who come from that angle. And from my perspective, 21X is in between trying to bring together best of both worlds. Is that a right picture that I have?
Yes, absolutely correct. And it's at the same time the challenge, because what we are facing currently is to connect the buy and the sell side. So we are exactly this missing piece bringing together these two sides. And we need to have a very good feeling for what are the demands from the buy side. So what will kind of be the idea of the brokers, what they want to see on the product side, you can say. And at the same time, we need to know what is kind of the demand of the issuer bringing some new products. And it's challenging in a way to connect them, but it's very exciting. And we're currently very successful in doing so. And I hope we will be in the future. And then we would be this one shop, you can say, where we have access for also, of course, the traditional finance sector. And yes, as you can imagine, they need to rethink how they match and settle transactions too, because they are very used to the, you can say, old-fashioned way to do so. And they, at the same time, need to trust in this new technology and this new way of thinking capital markets. But they need also, the preparation to use this new technology, meaning that, as you know, we are not providing custody services. They need a custody provider supporting them with their wallet solution. And as the market is, I see it well prepared now for the settlement solution. We do not have kind of hurdle here. I have more the impression that now all the right things are coming together, also with a view on the traditional finance sector.
Okay, maybe one important question. So this real world asset thing that securities are usually called in the crypto space, there are some marketplaces out there who might not be regulated. And I sometimes ask myself, so who is actually legally dependent on your secondary market? So you might be able to trade tokenized money market funds somewhere else, but which entity has to actually use something like 21x and is maybe legally not allowed to go into such a Wild West marketplace?
What we are now heading is to have only the, you can say, most reputational issuers on our side. Why is this? Because we are a regulated entity. So we are an investment firm. We are supervised by BaFin and also ESMA. So we need to take care that also our issuers are fully compliant with their requirements. So that's, you can say, the headline of everything when it comes to issuers, because it's quite similar to what we have in the traditional market. We cannot kind of build something completely new, and this shouldn't be the case, because we have the regulation for a reason. We need a prospectus to some extent. So we need kind of the disclosures relevant for the investors to understand what is the product, what I am actually buying here, what are also the risk associated with the product. And so this must be in place. That's crystal clear. And when the issuer decides not to comply with it, there's no way to go through. So that's the clear view. As you can imagine, when some new players come into the game and say, hey, we want to list something on your exchange, we need to educate them. You need to comply with the prospectus regulation. You need to be proper with all your entity-related things here. Sometimes the answer is, no, we cannot list your product yet because you're not ready for the European market. And then they come, the situation is they come back with the new setup, and then they would be ready. But sometimes we need to push them back because they are not complying with our current regulation. But this is kind of, when you want to convince also the traditional finance sector, you need to ensure that the regulator is with us and all the regulations are in place, and also our sell side is ready to comply. Otherwise, you're not able to convince them to be a participant. And yes, that's again the situation to how to link these two only when everyone is complying with the regulatory framework.
So to repeat that in my words, you have a very strong filter on the sell side, which is very, very important for the buy side.
Yeah.
And so you match regulated entities who might be more on the conservative side of things when it comes to the asset, but maybe innovative regarding the rails you actually trade on. So you try to combine, again, best of both worlds, I guess.
I think also maybe to add to that, right? And that is, maybe, and also to make it a bit more concrete, I think to give an overview for the audience, like I would say first and foremost, in also looking at the go-to-market strategy of ours, you kind of targeting like more wallet-based investors, Web3 investors that are already using wallet infrastructure, whether it's DAOs, dApps, foundations, crypto high net worth individuals, or RWA funds. But then in the next step, and what we're looking to do in 2026 is to really scale. And there, amongst the target clients are crypto exchanges, crypto brokers, neobanks. I think the likes of, companies that are already servicing large audiences, both retail and institutional. And we also are looking to work with the likes of distribution platforms or partners, right? So we've struck deals with the likes of ERP system providers, order management system providers, core banking platforms, or also custodians. I think there's a huge case to argue that there are some new ways to really unlock and kickstart liquidity, where we're working on multiple streams and where we're very bullish in light of also the developments that we've seen throughout the last couple of months, in particular there, right? I think also there, what's interesting to maybe to differentiate what's happening already in the market and what's different about 21X is the fact that a lot of these crypto exchanges that have the required permissions, like in Europe, you would need a MiFID license, right? They're brokering security tokens, DLT financial instruments, OTC, so over the counter. And that's something where there's obviously a struggle when it comes to liquidity provision. And our approach is really much more of an open nature, where we're going for multi-platform distribution, working with multiple of those venues, right, where liquidity is aggregated and where we are basically in a multilateral form and manner providing both primary and secondary market services, so issuance, distribution, trading, and settlement of these instruments. Yeah.
Let's dive a bit deeper into that, because regarding the infrastructure, I think one of the most interesting points is your on-chain order book with stablecoins on the cash leg. That's, I think, very much a differentiator. For the moment, it might be kind of an Achilles heel because not everybody has stable coins and not everybody has a wallet on the cash side. So I think that's the precondition actually to interact with you. And then there is kind of the pre-funding thing that you actually need to have cash on chain and put it into the order book. How do you judge? I think that's a big decision actually in your design and differentiates you very much. How do you judge that decision for now? Do you see bigger problems to get clients onboarded because you have these preconditions? Are you optimistic about the traction, or how do you think about that design decision now, end of October 2025?
So I would start with kind of setting the scene. I think it was a very good decision to start with stablecoins, so regulated e-money token, of course. Why is this? The simple reason is because a tokenized wholesale CBDC solution is not ready yet. So we didn't have an alternative here. So this is one reason to start with EMT. But the second is that with Miker and very good players now, so issuers being ready, we have a very proper solution for tokenized cash via the EMTs. And yes, we can enable the beauty of this atomic settlement with EMT, and the market is demanding this. What Max mentioned is that our client base, one of, you can say, the core circle of our client base is, you can say, crypto native. So they have a wallet solution in place, they have cryptocurrencies in their wallet, and they have, of course, also stablecoin. So they are loaded with stablecoin and ready to invest. And with that, or with our current structure, we are directly targeting these clients. And this was kind of the low threshold opportunity to get the system up and running. But as you also might know, we're currently participating in the Pontus Working Group, so the ECB initiative that has kind of the aim to enable a wholesale CBDC solution in a short-term and a long-term solution. And yes, we are very much into enabling this because the best case scenario would be to provide both, because some clients coming from the, you can say, conservative side are not ready for different reasons to enable e-money token settlement. So they would be very much interested in having a wholesale CBDC solution. And we are aiming to be an open market infrastructure to also kind of have the right solution for these clients. And we are very much working on it. So maybe Max, you have something to add, but yeah, that's kind of my view currently.
Yeah, I think what comes to my mind is, again, more like the market side, right? Like, what are the new use and business cases that we're going for? And where does it become critical that it is stablecoin enabled? And yeah, Victoria rightly pointed out, we are already working with the likes of leading companies in the space. We are, if you so want, also to some extent agnostic, even though we're very selective or careful in selecting who we are admitting to trading for settlement currencies. And I think it's also fair to say, and also interesting to point out, that it is both what I call private agents, even though some of them have gone public meanwhile, and the likes of commercial banks or bank issued stable coins, where we've seen also recently a lot of dynamic in the market with two consortiums coming out and announcing, their stablecoin projects. Those are going to take some time, right? I think it's fair to say that that's going to take probably like around 12 months from today for these coins to really hit the market. But at the same time, we're ready to go and we see demand, right? And we need to meet that demand. And like Victoria said, until there's actually an alternative solution that is, leveraging what we are providing as a DLT-based market infrastructure. Because I think what's also super important to understand is we have an on-chain matching, trading, and settlement system. Don't be mistaken by the fact that we might, add functionality to our market infrastructure. I can't give away too much there at this time, but this is our current setup, and we need to focus on, like I said earlier, kickstarting liquidity, right? We want to get this market going, and so do like the likes of our ecosystem partners, whether they are on the sell or on the buy side, and that's being driven strongly institutionally, but both coming from TradFi and from DeFi. This is really essential. We're very, interested in those projects on an ECB level, whether it's Pontus or Next Step Appia, or also the likes of, works that are ongoing outside of the EU. You will have taken notice that, there are certain developments in the UK, in the US. These are surely, of great interest to us as well.
Which brings us perfectly to my next question, Mark. You announced that you will be expanding to the US. And this obviously follows your idea, follow the market and look for or be there where the demand is. And I think US goes crazy these days with Genius Act and all the regulatory tailwind that they now have with the Trump administration. But again, we still are a bit in the bucket of the regulatory affairs. So in the EU, you were the first, you have this DLT Pilot Regime license. I think in the US, it's a much more open playing field now, that you might have the advantage that you already developed that solution for some years. So you are quite ready technologically. What about the regulatory side of things in the US? How complicated is it to be allowed to do the same thing in the US like you do in Europe?
So already kind of the question to raise with the regulatory affairs person. So you need to see that the regulatory framework in the US is completely different. So the whole system of thinking, laws and regulatory is completely different. But what was kind of our experience there when we visited the SEC, we were welcomed with arms wide open. So they said, hey, come to the US, roll this thing out here. We won't stop you. So this was kind of the clear message. Of course, you need to comply with, again, the regulatory requirements. That's for sure. But our impression was they're quite progressive in their approach, and they mean it. So they want to have this new technology and this new way of thinking capital markets in the US. And this was kind of our ambition to move to this market and to try to build this there. And yes, we need, of course, the right licenses to do so, which will be a broker-dealer license, ATS license. So that's kind of you can say, equivalent in the US to build this there. And yes, we need to apply for these kind of licenses, but we identified this market as a proper and very prospective market to roll out our existing system there. And yeah, we're excited to go this road down.
And is that then a similar setup as we see in Europe or in the UK, where it's rather sandboxes or a pilot regime here in the EU? Or is it then a proper license and, whether or not you do it on blockchain doesn't actually matter?
So we need, of course, kind of exemptive relief too. So it doesn't fit to the existing regulation, but so we need to gain some exemptions here and there, but it won't be under, you can say, a very inflexible or unflexible regulation. We can just apply for the license and say, hey, we want to solve this and that with our DLT and the trading and settlement engine here. And then we can kind of convince the regulator to do so. And then they're saying, okay, under our view, we are accepting the way you think and try to build the DLT TSS US, you can say, and they confirm it in a way, and then we can go ahead. So this is the way to go. You don't have like a specific act and you look into this single rulebook and say, okay, I can do this and that. No, this is not the case in US. You need to present your idea and your operational model to the regulator, and then the regulator kind of confirms, okay, you can run your system like this with the proper licenses, of course, but that's kind of the different approach here. And of course, it very much relies on the administration. So as we have now a very pro-crypto and digital asset administration, we, of course, profit from that.
Very cool. That's cool for you and good for you, but it's also good for your competition. So how afraid or how positive are you? Because the US is the center of the global financial market. So I guess you won't be the only ones who try to get these exemptions. What's the market landscape looking like from your perspective? Do you see other movements, other maybe big players trying to get into that same market?
Maybe just, I think this question could also a good one for Max, but maybe to pick up the NASDAQ, you can say publication. Of course, we have the existing exchanges also enabling tokenization of securities and building the capital market. So, of course, there are competitors, but we are coming with this, you can say, ready to market solution with the matching, so the DLT based matching and settlement engine. And we can just roll out this in the US and we would be ready there. To my understanding, the existing exchanges and market players in the US are maybe, I don't know, but maybe not ready yet with a technical solution. We need, of course, the regulatory side too, but we have the technical approach in place, and this could be, of course, an enabler and the fast track, you can say. But let's see how fast we will be.
I think it's fair to say we don't know where, the likes of competitors stand in their technological developments. But we obviously see, some of the licenses that have already been granted, and we see that exemptive reliefs have already, been given by the regulators. What I would stress and what is important, especially with what Victoria highlighted, is we have a solution that we are ready to be able to deploy. And we've gained the confidence from the conversations we've had with the US regulators. I mean, we've been to Washington, we've spoken to, the crypto task force, the SEC in great detail. And I think, also need to really start stressing the fact that the architectural nature of the actual market infrastructure and how it is designed makes a big difference here. Again, we're going to be able to enable entirely new use and business cases that require for smart contract enablement. right? It's really essential. In particular, we're trying to conduct matching and trading in an atomic form and manner. There's like also maybe one thing to highlight. We don't have a depository component with, for example, the financial market infrastructure at all, right? So this is also something, if you come to think about, if you're placing a smart contract based buy or sell order and the locking of the asset within the smart contract, then there's also something of, say, a bit more complexity that you need to come to terms with the regulators on how they actually classify that. We all have the confidence that we are going to obtain the exemptive reliefs in the US, and that it can happen in a say very short time manner and span for us to be up and running there.
Max, that's also a great bridge to maybe in the next chapter, which is combining the wrap up of the tech side, but then also who this is relevant for, right? The beauty of that, what you just explained, is also that it's all on public blockchains, right? So many of the initiatives that we see are rather on the private side. For years now, traditional financial players have been trying to ramp up private closed loop systems. Here you are operating on a public permissionless infrastructure where ultimately actually the world has access to, right? That also opens up new client segments that so far have been reluctant to go on closed loop systems, but rather really want to stay on the public side. So is that actually also, obviously it's a design feature, but is that also then leading to the clients that you actually want to reach? So who are those clients that want to trade tokenized securities on a public permissionless infrastructure?
We have the likes of wallet native investors, right? I did touch base on that just previously earlier. I mean, Web3 investors, you could say, ranging from, foundations, but also to the likes of funds that are running on chain. Most of their portfolios are on chain already. You have crypto exchanges, brokers, but then also distribution platforms and partners that we're working together with. And obviously on the sell side, I think it's fair to say we're working with some of the largest asset managers in the world already. And the list is really growing quickly. So there, I think the motivation is simple. It's a play for new distribution channels. It's a play for efficiency gains on different infrastructure, and it's about direct distribution, reducing administration costs. If you so want for the traders, it's about the massive advantage of instant atomic settlement, unlocking capital that is stuck in clearing cycles, or also to unlock returns for, say, dormant cash positions that are on chain, right? We all know stablecoins are not interest generating by law, whether it's money market funds, ETFs that we have a strong focus on at the moment, or then also other likes of products such as bonds and also equities. These are solutions that we're bringing to the market where candidates such as, treasuries of these entities are ideal. And that's the use case that's moving the money.
Max, I have an add-on question here because we had all these bond issuances, especially on Polygon in the last years in Germany under the EWPG, and they always claimed or were sorry that they didn't have a secondary market. As an observer, I could imagine they should run to your door and say, "Hey, Max, 21X is here. Can you create a secondary market for our bonds like KfW or Siemens or others have tried to do that?" So is there any response from the market in that regard?
Yeah, absolutely, Stefan. I think that, like you rightly say, I mean, I would even go so far to say it's been, to some extent, I think, the missing piece of the puzzle in order for many of those projects actually to move forward, and in particular also for the institutional adoption that we're currently seeing. And I think that's also what we're particularly excited about, is with some of these liquidity unlockings happening over the next months, and with that confidence growing, but also with the commitment being there from the likes of certain market players, I think that's leading or shifting the market at the moment. I think what we're experiencing is really that the domino stones in the background have fallen, and that on-chain capital markets are the future.
What we've also seen with those issuances when they were being placed on OTC markets, trying to be sold, that there was basically no liquidity, right? So you really had to match the buyer and the seller on these OTC marketplaces. Now your multilateral trading facility under the TSS provides a much better and a very different concept to allow market makers actually also to provide liquidity, right? So how do you actually want to bootstrap this liquidity on the network? Because we see some of the initiatives in the market like SDX, for example, where the liquidity is still not really there, right? So how do you want to make sure that your exchange is different and that it actually becomes a liquid market for those securities?
Yeah, I think that's the $1 trillion question, Manuel, solving for the chicken and the egg problem. I can't even say how often I've been asked this question over the last 2-3 years. Like, it must be in the thousands, but like literally, that plays kind of into what I was saying earlier. And obviously I cannot give away too much, but what I can say is we have a first market maker that has onboarded with us. We have been, experiencing a great increase in demand also from market makers to work with us on the likes of, for example, specific cases that we see taking this market infrastructure to scale, right? So think of like a crypto exchange, right? I think it's no secret. We've seen an announcement just recently of how much the trading volume has hit over just a few months of X stocks, for example, on Kraken. Just alone, I think there's significant increase in trading volume. And with that, and as you rightly pointed out, with us being able to provide an MTF, besides the settlement system, we are convincing the likes of market makers to join and to enable exactly such flows. I think, again, that is just one example. Another example would be to find ways of how we can get access to the likes of corporate treasuries at scale, right? In order to, enable, for example, automated cash and treasury management on chain. Same if you would think of like the leading custody solution providers. If you could enable native swapping, right, within the actual custody solutions console. Yeah. And that all plays back to these exemptive reliefs that we have in Europe, right? I mean, 21X and the DLT TSS license covers for 18 exemptions, 17 from the Central Securities Depository Regulation, 1 from MiFID. And what we are capable of doing is we're able to provide access. And this is, if you think of liquidity, you need to be able to allow for access. And it's also about accessibility. And I think here what's playing into that development is that for some of these brokers, exchanges that are, onboarding and connecting to us, that they need also specific licenses in place. And the market is, moving in that direction. Not all of them have those licenses yet, but many of them have obtained them just recently or are in the process of obtaining them. And that's what's going to get us started.
Building such a new setup obviously wants to capture the market, but I'm wondering how you want to capture it, right? Is it rather by leveraging the efficiency gains that you get through the technology to lower the costs, so make it less costly to trade securities in comparison to, let's say, traditional financial markets, or even actually also DeFi marketplaces where you can also swap assets against each other's. So where do you position yourself in the market between the traditional financial world and the completely decentralized world? Is it a cost play, or is it rather a play to say those that want to trade on blockchain now have a marketplace, and therefore there's also a price for that?
So first of all, I think compared to TradFi, we are aiming to significantly reduce costs or realize cost savings by cutting out also intermediaries. I think that's fair to say, even though we are focused on B2B2X, and we are enabling many of the likes of the market players today. So we don't provide for custody services, like I said earlier, even though we could, and there's a reason for that. Market infrastructure, self-custody enabled. But obviously, such is the case on without saying any names, on certain trading venues where in the background there's like still, say, almost a dozen intermediaries still involved. That's no longer the case, right? So there's significant cost savings, and I mean, it won't be always up to us to say that, you know, these are going to reflect also on the fee side for the investors, because it doesn't always lie in our hands how they go about, you know, running their pricing strategy. But what I can say is that for direct participants on 21X, that can be expected, you know, to be reflected there as well. And I think really, given that we operate a regulated on-chain order book on public chain, and that means that we have a DeFi level efficiency and cost savings enabled with the atomic settlement, the code-based execution, we are then in the next step also able to provide, say, methods of scaling, right, where we don't have that type of back office infrastructure and requirements anymore like traditional exchanges do. And I think, again, in the end, the end client, in our view, they won't realize that it is happening on chain. But yes, I do expect for costs overall to go down over the next years, right? And I would hope that this is also to the advantage then of both the issuers and also investors.
I mean, that's a perfect segue and bridge to the last piece that we also want to touch. Looking at the time, it has accelerated quite quickly, which is actually the future of the market infrastructure. If all that what you've just said plays out, I think there's a bright future here. Stefan, I think you wanted to capture the last piece.
Yeah, absolutely. So let's imagine both asset and money is on chain. What does that actually mean? Could you paint a picture? Maybe in 3 years from now, when we have all the asset classes on chain, stable coins or other forms of money are naturally on chain, and people use them actually much more than today in Europe. What does that world look like?
I know you guys probably have heard me say this already before, right? But I like to call this the Spotify moment of capital markets. And I think that the evolution is a paradigm shift where, you know, programmable 24/7 markets become a reality. When you're clicking on an investment product, it is, you know, instantly starting to generate returns. These returns are calculated on a per second basis. And that really means that programmable compliance embedded in the asset itself, you know, that which is, in my view, also a game changer. It means, like we discussed today, atomic DVP finality in T plus, 1 second, where that becomes the new default and not just an aspiration, right? Where we eliminate, risks that are associated yet still today. And I think that in the future, I see a world where collateral will automatically adjust and rebalance instantly based on market conditions, where I think that also AI will play a huge role in this, right? I get back to that point of automated cash and treasury management. Why not have, AI take care of the treasury's investment strategy when cash is being, lying around in a dormant form and manner, but used at a specific point in time where you can have that cash instantly available. I think this is my view of where we are heading. And I think that we've already made great leaps over the last years, but something that, I haven't stressed yet today and maybe is a good point to say is that for all that we need regulation to be in place. And that's also why I think it's really essential. We are hoping for more harmonized capital markets in the future. We're trying to connect the dots. That's why we are in the 2 largest markets in the world. Now, in the next step, also the US besides the EU. And that's only because the US has opened itself towards that. And we see that that's going to be critical for global on-chain capital markets to play out.
Cool. And maybe to take it on a lighter cue, when that all works out, what's the one headline that you'd love to read about 21X in the Financial Times, maybe in 5 years? What's the headline?
Well, Vicky, you wanna take that one?
I would love to read that 21X is running the new capital market.
Okay. the new capital market that's one globally?
It will be maybe a connected one, but yes, that's kind of the view. We are building everything on a decentralized infrastructure, cross-border infrastructure. So the hope is to connect countries, of course, to some extent. But yeah, that's kind of the bigger view.
That's a nice one, because actually that's what motivates me in that space, that it's actually a global movement, and regulation is actually, and the way you address it is global, actually, because you are on that public permissionless thing, and then the regulation in a certain region just limits what you are actually allowed to do, but technically you could do anything. And I think that's what we wanted to bring across with this podcast today, that this is very different from the past. It's not connecting islands that were born as islands. It's rather starting with a global thing and then maybe limiting it to a degree that's okay for a regulator to try out in steps. And I think that's a very mature approach to foster innovation. And what I also like from this discussion is that two very different approaches, like the more cautious sandbox approach in the EU, is now accelerated by the crazy movements in the US, and somehow I think they already see that they need to meet in the middle, like we see with MiCA and Genius. I think someone needs to start, others improve, and actually I really like that also regulatory competition, and with players like you in the middle, that's really cool to see.
Yes, and driving this actually. So we're very much on it, and we're in very close talks with the regulators how to build this, how to solve this, how to stay competitive regarding the US developments. So we're very much actively pushing this forward, and this is very, very exciting.
Yeah, I'd love to welcome you back after you've gone live in the US, because I think that's a very, very interesting piece. We see this now with the multi-issuer stablecoin discussion in Europe, where these public chains and this public infrastructure now really creates completely new complexities, right? Where the reserve sits in one country, but you can also use it in another one. And then if you want to redeem, how will the liquidity move? So all those questions will likely also going to be relevant for you, not only on the stablecoin side, but clearly also because, the client segment that you can address with a public permissionless infrastructure is global. And hence there's going to be two different licenses in the in the US and in EU. But how will this play out ultimately? So I'd be very keen to welcome you back. Thanks a lot for all these insights. That was an absolutely fascinating discussion. We wish you all the best now for the next steps. I think here as well, gaining momentum, gaining volume in Europe, but then also for the new start in the US. And again, very happy to welcome you back in the podcast, maybe in a couple of months when US is live. Huh?
Thank you, Manuel. Thank you, Stefan.
Cool.
Thank you.
Talk soon.
Have a good day.
Bye-bye.
Bye.
The views expressed are solely the personal opinions of the hosts and are provided for informational purposes only. This podcast does not offer financial or investment advice. Always conduct your own research and make well-informed decisions before investing. Please be aware that the hosts and guests may hold cryptocurrencies or digital assets discussed in this episode.